All right, hello everybody. Welcome to another episode on my channel. So, November was a pretty crazy month for the stock market. Stock prices went up, valuations also went up, and so did my portfolio. So, what we're going to do in today's video is look at the dividends that I received in my portfolio, look at the buys that I made, and look at my overall dividend growth portfolio performance. So, if that's something you would be interested in watching, I encourage you to watch the video. And if you like it, give it a thumbs up. So, without further ado, let's go and dive right into the video. So the S&P is up roughly 6.41% over this past month in November. Now let's go and look at my portfolio. So what I want to look at first is the dividends that I received. This is a dividend growth portfolio. So on November 1st, I had JP Morgan, the largest North American bank, pay me roughly $10.93 in dividends. I had TD Bank, one of the large 5 banks here in Canada, pay me $33.15 on November 1st. National Bank, this is the sixth largest bank or financial institution in Canada. They paid me $7.96 on November 2nd. Then we had Lowe's in that home building, home renovation space duopoly with Home Depot. They paid me roughly $5.90 on November 7th. Then we had American Express, one of the great credit card payment processors, also facilitating these credit card payments. In a similar space with Visa and MasterCard, they paid me roughly $5.93 on November 11th. Now, ADC and O, or Realty Income, we'll look at them together, but ADC paid me roughly $5.31 and O paid me roughly $3.26 respectively on November 13th and 14th. So these two REITs here, again, I've said this many times on my channel, great monthly dividend payers. I've been buying them while valuations are low, and they are great, steady, consistent dividend paying real estate investment trusts. I look at O as almost a father or big brother to ADC or Agree Realty. I think that this is a great combination in my portfolio and adding to my dividend income this month. Next, we have Apple. Apple paid me roughly $2.98 on November 15th. So, again, Apple not really contributing significantly in terms of current dividend income. They do grow that dividend income at nice, decent rates above inflation. They are more of a growth company, as you should know. Costco, they paid me roughly $2.32 on November 16th. Again, not a huge dividend here, and I also don't have that many shares of Costco. NSC Railway, they paid me roughly $4.58 on November 19th. So one of the class 1 railroads here in North America. And Visa, one of my favorite companies, paid me $2.98 on November 30th. Again, not a lot of dividend income from Visa, but they do grow that dividend at very significant rates, and this will lead to significant yields on cost. So for November, I received roughly $85.31 in dividends, so a pretty great month here in terms of dividend payments. And again, all of these were reinvested back into additional shares of these companies. I have my dividends on auto reinvest. That way I don't have to think about it. It just keeps compounding my dividend snowball over time. Let's go and look at the buys that I made this month. So I didn't really buy a lot this month. I just looked at valuations, and as the stock market was rising, like I said, so were valuations. So I kind of pumped the brakes and I didn't really buy too much, but I did buy companies that I thought were still undervalued or fairly valued. So Brookfield Corporation, I've done a bunch of videos on them on my channel in the past. I still think they're heavily undervalued. I am pretty happy with my total position in Brookfield, so I'm not adding a lot. So I did add 2 shares of Brookfield for roughly $64.92, and the cost per share there being $32.46. So again, I just bought a couple shares of Brookfield. I find that when I'm bored sometimes, and I have a little bit of cash in the account, I just have a trigger finger where I end up buying a couple shares. And again, it helps when it's buying shares of an undervalued company. So I felt comfortable with that buy there. CP Rail, just did a video on CP Rail. It's going to be one of my key core holdings here over the future. So I actually did make a substantial couple of buys into CP Rail. Great company, class 1 railroad. Again, like I said, I've done videos on them on my channel in the past. And if you haven't seen those, check those out. But great railroad, again, with their new rail line connecting both, all three, Canada, the United States, and Mexico. I believe this is going to be a great long-term dividend growth company in my dividend growth portfolio. So I bought 7 shares here for a total cost of almost $500, roughly $70.91 per share. Next, I bought a couple more shares of Realty Income, or O. Again, I still think it's undervalued here at $53.61. I paid $107.22, so again for those two shares. So I still think O is undervalued, even though it did dip to roughly $46 or $47. I believe my average price is around that $49 mark or $50 mark. So I'm still accumulating here, and I've basically built out the position that I want in O. But if the prices stay relatively low, I'll keep adding. This is a great REIT, proven track record, steady, consistent dividend payments and dividend raises. Again, huge moat here in my opinion. Occupancy rate close to 98-99%. They just are acquiring Spirit Realty. Again, I made a video on that in the past, and I think that they're just going to continue to keep growing this dividend, and the share price will follow along. I still think it's undervalued, and I'm going to accumulate this REIT and basically the REITs in my portfolio as interest rates remain high and they are at lower valuations than they traditionally have been. So I basically spent about $670 this past month buying the shares of these companies, and the cost per share is here listed as well, so feel free to take a look. Now let's go and look at my portfolio. Let's zoom out a bit here. So if you've been watching my channel for a while, you should be familiar with this portfolio. It's my portfolio tracking spreadsheet, So you would have seen a lot of these, but I'm going to go through basically most of the relevant sections for those new viewers. So we're going to be looking at the sector allocation. So these are the sectors that I invest into, my current stock allocation, so the percentage of each of these equity holdings or stocks in my portfolio, the annual dividend income by stock on a percentage basis, and then we can also look at it in terms of a dollar amount here. And then we'll be looking at the gains or loss of my current positions in my dividend growth portfolio. So let's go and dive right in and get a closer look at each of these sectors. All right, so my sector allocation. So I have about 19% invested into tech. So this is basically made up of Microsoft. We have Apple in here, and again, Visa. So again, payment processing is Visa, but again, very tech heavy here, 19%. I'm very happy with this slice of my pie. Alternative asset management at 12.7%. So this is the Brookfield Corporation and Brookfield Asset Management. We have real estate here. So like I said, it's at a pretty significant portion of my pie, 12.3%. I didn't really envision it being this high when I started my portfolio, but as valuations dropped, I kind of just said, well, I need to take this opportunity because I'm of the belief that interest rates will not stay this high for that long. I think that they're going to be higher than we previously saw again, but I still think that they're going to drop pretty significantly in the next couple of years. So I'm using this chance to accumulate real estate or REITs, and I ended up making them about 12.3% of my portfolio. And again, this is REITs such as Realty Income, like you saw I was buying. I have ADC or Agri Realty, also have VICI Properties and American Tower. Payment processing, so it's about 10.5% of my portfolio. So I have Visa in here, I have American Express, and I also have a very small position in MasterCard. I would actually like to build out my position in Visa and MasterCard a little bit more, possibly getting this payment processing up to a 12.5% of my portfolio. Canadian banks, so kind of these steady eddies here in Canada. I really only have two Canadian banks in my portfolio. I have TD Canada Trust and National Bank. Great dividend payers, huge moats. The Canadian banks are very well regulated. In Canada, there's not a lot of competition here. They sort of have an oligopoly. It's again multiple monopolies on the banking system when you have the large six banks. So you have Royal Bank, TD Bank, Canadian Imperial Commerce Bank, CIBC. You have Bank of Nova Scotia. You have BMO, Bank of Montreal, and then you have National Bank being the sixth player. So again, not really the same banking system as the United States, which is more fragmented. Canadian banks here are a huge oligopoly. So they make about 10.2% of my portfolio, and great dividend payers and dividend growers. Consumer discretionary. So this is made up about 10.1% of my total portfolio. And again, the companies in here are Costco, we have Lowe's, and we have Home Depot. Railroads, so I love my railroads. I've made a bunch of videos on them in the past. Like I said, I was buying CP rail, and the railroads make up about 10.1% of my total dividend growth portfolio. So in here, I really have CP Rail as the number one position, and then I have a couple smaller positions in CNI or CNR, so that's Canadian National Railway, as well as UNP, and that's Union Pacific. Now, I freed up some cash because I took a couple gains and I wanted to have some cash on the sidelines for reallocating amongst other opportunities that I see fit. So I have about 7.8% of this portfolio in cash. And then the smaller portion of this pie being the US banks at about 7.3%. Really, the majority of this position is in JP Morgan. It's about 5% of this 7.3%. And then the other 2 to 2.5% is in Bank of America. So the two largest banks there in America. So that was the sector allocation. And I feel like it's pretty diverse. You know, I've done a pretty decent job, I believe, in trying to get that diversity or diversification across sectors. A lot of them are really at 10% in each of the respective sectors. Again, tech being a little bit heavier, being double at 19%. A lot of that actually has to do with the recent market run in the technology companies and valuations. And then I've also added a little bit more into real estate, like I said, and alternative asset management, again, as I feel like those are undervalued. And I'm making my decisions to allocate into those opportunities right now. Let's go and look at my actual stocks in each of these sectors. So as we can see here, the sector allocation was pretty diverse. Now my stock allocation, I believe, is also pretty diverse. So I have Microsoft making up 11% of my portfolio, Brookfield Corporation making up 8% of my portfolio. One thing to point out is Brookfield is actually my larger position when I consider the Brookfield ecosystem in totality or aggregate. It's about 8% here, but then adding in Brookfield Asset Management, it's actually about 12.7% of my total dividend growth portfolio. So it's actually my largest position is invested into the Brookfield Corporation and Asset Management. Then we have TD Bank here at 7.4%, Apple at 7%, American Express at 5.9%, CP Rail at 5.9%, JP Morgan at 4.8%. We looked at Brookfield Asset Management. We have Visa at 4.3%, Costco at 4%, VICI Properties at 3.9%, Agri Realty or ADC at 3.8%, Lowe's at 3.2%, O or Realty Income at 3%, HD or Home Depot at 2.9%, National Bank at 2.8%, UNP at 2.5%, Bank of America at 2.5%, CNI or CNR at 1.6%, American Tower at 1.6%, Google at basically a percentage, MasterCard, a very thin sliver here, again, just very, very small, 0.28%. We have cash roughly at 6.2%. And again, this is cash in totality, making up that 7.8%. I have US cash and Canadian cash here as well. So that's my current stock allocation. I feel like it's pretty diverse. I get a lot of exposure here to different companies across different sectors, again, with different businesses. Now, looking at the annual dividend income I actually get per each of these stocks or these companies. So the banks and the real estate investment trusts actually do pay me the most. So TD Bank here makes up almost 17.8 or 18% of my total annual dividend income, followed up by the REITs being VICI Properties at 10%, Agri Realty at 9%, we have Realty Income at 8.1%, Brookfield Asset Management at 8%, JP Morgan, National Bank, again here, the banks here really paying me strong dividends, again with Bank of America here as well. Then we have Microsoft just because of how large a position it is. It's not a huge dividend yielder, but because it is my largest position, it does pay me about 4% of my total annual dividend income. We have Amex, Lowe's, Brookfield Corporation, Union Pacific, American Tower, and a couple of the smaller positions here pay me a little bit less dividends. So when you want to look at that annual dividend income by stock, you can look at that here as well. So Microsoft pays me $34, Brookfield Corporation at $24. Again, these are more growth companies, so not paying huge dividends every year. But TD again pays me $147 annually in USD, so that's a great amount of dividend income in my opinion. And we have Apple at $14.77, American Express at $32.97, CP Rail at $17.82, JP Morgan at $50.56. So you can kind of see it's a little bit staggered, and you can see that the REITs and the banks actually pay me a lot of that current dividend income. Again, they are slower dividend growers, but they provide that dividend income to sort of balance out the volatility of my portfolio and allow me to reinvest as I see fit into dividend growth and dividend paying companies. Now let's look at the performance of my portfolio and each of the stocks individually. So you can look at them as a dollar value if you want here. I'm going to look at them in terms of a percentage because that's more relevant, I feel. People have different dollar amounts, and again, it's really the percentage that you should be looking at. So when I look at Microsoft, I'm actually up 42.58%. Microsoft has had a huge run up in the past couple of months. It's trading at pretty high valuations. I wouldn't be surprised to see it contract. Again, I'm not selling any of my shares. I'm holding it for the long term, but it is my largest gainer so far, 42.58%. And again, these are all listed in terms of weighting in my portfolio. So highest being here Microsoft, the lowest here being MasterCard. And then we have Brookfield Corporation up 16.32%. TD Bank down about 1.76%. And again, please note these are all price. This is all based on price, not counting the dividends. So when you look at the dividends, I'm actually up a little bit more in these positions. So for instance, TD, I'm not really down 1.76%. You add in the dividend yield, I'm actually up. Then we have Apple, I'm up about 31%. American Express up about 16%. CP Rail up a nice 8.37%. JP Morgan up 37.47%. Brookfield Asset Management up about 9.5%. Visa up about 30%. Costco up about 39.41%. So again, Costco is my second largest gain as a percentage. It's just been on a tear, and it kind of sucks because it's a good thing, it's up, but I can't buy additional shares at the prices that I wanted because of this large run up. So I'm just patiently waiting. Again, Costco rarely goes on sale, the stock, so I just got to keep waiting, and hopefully it does. But again, I'm not too sad because I'm up 39%. I just wanted to buy more shares. VICI Properties up about 1.3%. Agri Realty down about 2.5%. Lowe's up about 4%. Realty Income up about 9%. So great buy here in my opinion. In the short term, at least for Realty Income. Home Depot up about 7.5%. National Bank up about 1.92%. We have UNP up about 16%. Bank of America up about 10%. CNI or CNR, Canadian National Railway, up about 10.37%. American Tower up about 26%. I feel like that opportunity to buy American Tower when it dipped was one of the greatest opportunities I've seen in a while to buy this cell tower or communication tower REIT. They rarely go on sale, sorry. So again, I had to scoop up that chance when I had it. Google up about 7.5%, and MasterCard up about 13%. Again, these are the smallest positions here in this portfolio at about a percentage, and this is about a third of a percentage. So very small position here. So that was the gain and losses in terms of a percentage of each of these holdings. So when we scroll down, we can then see the dividend income that I get from these holdings, $830 roughly in USD and about $1,100 in Canadian. And you can see the gain or loss in Canadian here as well. So I'm up about $5,000 in USD or $7,000 in Canadian. And the portfolio market value of this dividend growth portfolio is roughly $40,000 in USD and $54,000 in Canadian. So again, I have this information tab here, so it does sort of summarize these. So again, you can see I'm up 14.76% in this portfolio. So like I said, this past couple of months, the stock market valuations have risen, prices have risen. It's great in terms of current performance. I was actually hoping they would stay down a little bit longer so that I could add to the other positions I wanted to. But again, it's a good problem to have, right? So current dividend yield at about 2.07%. So let's compare this 14.76% of my portfolio performance to the S&P 500. I actually had a question asking me to benchmark my portfolio, and that's a very good idea just to show you my performance compared to the S&P 500. So you can see if I actually did not do any of this, how would my performance have been if I just bought ETF like VOO or VTI and I just let it ride as opposed to going through all this effort. So for me, I started my portfolio back in basically end of March, April 1st, 2022. So as you can see, S&P 500 is roughly up about 1 percentage point, or you can even round it up to 1.15 or 1.25 again. So it's kind of pretty much flat since I started my portfolio. And as you saw, my portfolio, I'm up about 14.76%. So that right there is a margin of outperformance, even rounding down 13% of outperformance of my portfolio. So I've actually outperformed the S&P 500 over this time period by about 13%. So in my opinion, my approach has been working. But again, a lot of people like to invest in the S&P 500 or other broad-based ETFs, and that's always a great option. And just so you are aware, this is my satellite portfolio. I do not share all of my other portfolios here on this channel. This is one of my portfolios that I have, which is a lot smaller net worth of my total net worth. So I do invest into broad-based ETFs, just not in this portfolio. So again, good performance here in my opinion in terms of benchmarking against the S&P 500, and I'm just gonna keep doing what I'm doing. So that was basically the video. If you had any questions, please let me know and leave them in the comment section below. I did have some comments in the last couple of videos asking me specific questions, and I really love that. I like to engage with my audience. So if you have any of those questions, I encourage you to leave them in the comment section below. So with that, I will see you in the next video. Have a great day. Bye. Please note, I am not a financial advisor by any means. All of this video and information is for your entertainment purposes only. Please do not invest without doing your own due diligence. Investing is inherently risky and you may lose money. I am not responsible for any investing decisions or losses you incur or make. Thank you. Have a great day.